The U.S. jobs report is more than just numbers, it's a political battleground. Here's why Friday's release will test not only the economy's health but also the public's trust in its data. And here's the twist: the controversy surrounding this report could reshape how we view economic truth itself. Last month, President Trump's decision to fire the head of the Bureau of Labor Statistics, BLS, the agency responsible for tracking employment trends, set shockwaves through the financial world. Critics argued it was an attempt to politicize a process that should be neutral and technical. Now, the Labor Department is set to unveil August's job figures, a moment that could either validate concerns about political interference or reinforce the reliability of its data. What's at stake? The report arrives amid a labor market in flux. Recent months have shown signs of cooling, with hiring slowing just as the economy prepares for the holiday shopping season, a critical time for retailers and consumers alike. Meanwhile, the Federal Reserve is poised to cut interest rates for the first time since late 2024, shifting focus from battling inflation to supporting job growth. But will the August data show enough strength to justify optimism, or will it confirm fears of a deeper slowdown? The July numbers were alarming. Employers added just 73,000 jobs in July, far below economists' expectations. What's more, the BLS revised downward its earlier estimates for May and June, revealing a sharper decline in hiring than previously reported. Such revisions are normal. The BLS can't track every job manually, so it uses statistical models and adjusts for seasonal factors. But the scale of this revision was historic, the largest two-month downward adjustment since 1968. As one expert put it, this wasn't just a tweak, it was a reckoning. And here's where it gets tricky. The July report didn't just reflect weak hiring, it also coincided with Trump's criticism of the BLS's accuracy. Economists worry this could erode confidence in the data, which global markets rely on for decision-making. If the administration continues to question the validity of these numbers, the consequences could ripple far beyond Washington. Trust in data is fragile, said Gregory Dacko of EY Parthenon. Once it's shaken, rebuilding it is a monumental task. So, what might August's report reveal? Most economists expect around 80,000 new jobs, with the unemployment rate holding steady at 4.2%. A figure near this level could ease fears of a collapse. But Dacko predicts a more modest gain of 40,000, signaling a marked slowdown. Another key detail to watch: whether the BLS revises July's already weak numbers again. If it does, it could indicate a prolonged slump in hiring. What does this mean for the Fed? The central bank has delayed rate cuts to combat inflation but may finally act in September as risks to employment grow. A weak August report would likely push the Fed toward a cut at its next meeting. Traders currently bet a 95% chance of a 0.25% rate reduction, according to the CME Group's FedWatch tool. But if the data surprises on the upside, the Fed might hesitate, a scenario Oxford Economics calls unlikely given the current trajectory. Here's the bigger picture asterisk: the U.S. labor market is at a crossroads. In 2025, unemployment rose above the number of job openings for the first time since 2021, a sign of a tightening market. Experts like Heather Long of Navy Federal Credit Union warn this is a turning point, a crack in the foundation that could widen. Meanwhile, the BLS's credibility hangs in the balance. If the August report sparks further debate, the real question is, can we still trust the numbers when politics collides with economics? Share your thoughts in the comments. Do you believe the administration's actions risk undermining trust in economic data? Or is this just another chapter in the usual political theater?